Ready to go?
Hello and welcome to this discussion on R&D tax incentives, which is our fifth episode of the Disrupt webinar series, proudly brought to you by Razoo. Razoo is a healthcare lending platform, and our Disrupt Pandemic series focuses on economic, social, and management considerations specific to the COVID-19 shutdown and restart. So today we're going to get you prepared for the next financial year. We have a discussion on the R&D tax incentives in Australia and how you can both save and generate value through investing in research and development. As always, we do have our disclaimer featured, in which we do advise that you do take a moment to read. In summary, this webinar is designed for general information purposes only and does not constitute legal or professional advice. Welcoming our guest speakers today, we have Jason Hood, a renowned R&D tax incentive specialist helping companies attain innovation funding, and he is based predominantly in Sydney and Auckland. Jason not only specialises in software, including fintech and blockchain, other sectors of his include IT, data analysis, finance, and pharma. Jason mainly advises business leaders from startup SMEs to large global organizations on how to claim back R&D tax credits and attain R&D innovation funding and improve the financial efficiency of their operations. Your speakers today, welcoming Dr. Grace Lai. She's a medical doctor and co-founder of MediBusiness, which is a strategy and operations consulting firm that is based here in Australia. Grace will be available to answer your questions on how to strategize your healthcare business growth and utilize the R&D tax incentives to innovate and acquire new technologies for your business. We also welcome John Dumante. He is the Managing Director of Electo Finance. He has extensive knowledge in mortgage management, commercial and construction finance, and is a specialist medical finance consultant. John will join us to provide insights from industry best practices, as well as utilizing the extensive network of healthcare professionals who can help your business innovate. Okay, so what is an R&D tax incentive and what sort of purpose does it serve? Well, the tax incentive reduces company R&D costs by offering tax offsets for eligible R&D expenditure. And what this does, it helps the ability to innovate, generate new products, to grow the economy, and essentially utilizes scientific skills and abilities, which basically develops new products and services. This then enables Australia to deliver world-class capabilities. So welcoming Jason. We're here to introduce to you Berkhood. Jason, I'm going to hand over to you to give our audience an introduction to your services. And please do inform us, how can healthcare businesses leverage the R&D tax incentive?
Perfect. Thank you, Sophia. And it's great to be on the panel with Grace and John as well. So taking over from that with a great introduction. So essentially R&D, most people think it's curing cancer or people in white lab coats. And as you rightly pointed out here, it actually gives you back a 43.5% rebate if you have a turnover less than 20 million. So above 20 million, you get a refundable tax offset of 38.5%. However, let's just work off the below 20 million receive refundable tax offset. So if you go on the next slide, across the different sectors within the healthcare, you have vets, dentist labs, you have farming, and also other science sectors. So as you mentioned here, again, I'm not sort of the expert in this R&D percentage of GDP, but there highlights the different sectors that you can claim on. We'll go to the next slide if that's all right, please. Perfect. So the main criteria, and as you mentioned, obviously Grace is the expert in the medical field. So at Berkhood, we essentially combine technical expertise from scientists, software, engineering consultants, who combine with financial expertise. And the main first criteria that they look at is, are you bearing the financial risk? So while you're developing a new and maybe farming, a yield or a plant, or essentially perfecting a service in what you do, or in dentists, a new crown, are the cost and your trial and error, are they falling out of the pocket of yourselves rather than a fixed cost outsourcing this to somewhere else? The second criteria they look at is technical staff. So are you extending your technical knowledge, or your staff, for example, your dentist or your technical technicians, expand their knowledge while undergoing this financial risk? The third is essentially what the ATO or Aussie industry look for, and that's, are you essentially using a systematic approach? So can you show pay slips? Can you show diagrams? Can you show PowerPoints and highlight this systematic approach while you're going about this process? So as we've essentially touched on here, we do have physiotherapists, vets, 3D imaging, and dental labs. And I'll touch on a few of the R&D components, and it'll be good if Grace can sort of complement where that's alike for the healthcare professionals.
Yeah, look, I think that this is a really exciting kind of situations. I'm happy to ask questions throughout the presentation, if that's okay with you. I'm hoping it's okay, Jason.
Oh yeah, of course, yeah. So
inquiring minds want to know.
So I do have higher educated and PhD qualified biotech professionals. So they've actually written for me the areas that can claim and past clients. So guys, if I can't answer the questions, I can get these covered from a more technical narrative point of view from my consultants to you guys.
So one of the questions that I've fielded from our clients is, you know, can they buy software that is off the shelf essentially and claim it underneath this?
So off the shelf, no. So a few years back, before the famous Airtasker R&D claim happened, you could buy off the shelf and it was almost anything went or anything goes, so to speak. So you could buy off the shelf, do an API plugin, and people would just claim it upon that. Now, essentially, you can potentially claim off the shelf as long as it's unique that you're integrating or essentially building upon that. But I'm going to say no for the ATO's cutoff. But unless, when you say off the shelf, if you've essentially built this in the back end and you've contracted somebody to build this for you and you've brought this in to help your own R&D, then potentially. But typically, you can't just pay for an off-the-shelf product. Right.
And I guess the complementary question to this, and I'll let you get on from here, is that if the product is, if the software that they've purchased is off the shelf, but the process itself is unique, and it just so happens that that particular software supports what would otherwise be argued as to be a unique process, is it possible to consider the cost of that software as being put into the overall R&D application?
Very good question. So one of the criteria, so there's 5 that you can claim upon, and we'll probably touch on this in a little while, is software licenses. So when you're actually buying the product, most of the time it's capitalized, whereas a software license, or how you're buying this to integrate or do the testing for in the healthcare sector, for example, might be essentially buying off the shelf solution to their test the patients or gather the data. Then you can potentially have a portion of this as R&D.
That's great. Thank you so much.
We'll go to the next slide, please. That's all right, guys. Okay, great. The first one's a good question. So many of you guys might be claiming with your accountants, and essentially they could be doing a very, very good job. So I'm not here to sit there and say they're not doing a great job. So they could be. Why essentially you should go to a tax incentive specialist is because, I can only speak about firm specifically, is we combine technical and financial expertise. So we only do R&D tax incentives. So someone like Grace, and obviously she's a doctor, very intelligent, we have these experts in the field that would speak the same lingo or the same tech to speak to that person within that science sector, engineering sector, or software sector. Then we'd have a financial consultant that would speak to the financial or the accountants, because all due respect to Grace, her sort of bread and butter may not be the finances, and it could be, so I apologise, but they're the technical experts. And an accountant is obviously accounts and finances. So it's a combination of this technical expertise that gives the greater justification, while also that technical narrative to the ATO and the technical body of the ATO, which is Aussie industry.
Could I
Yeah.
please ask you, Jason, so as an R&D tax incentive specialist yourself, do you see a lot of change annually with the sort of rules and regulations around it? You know, is it something that stays relatively, similar year on year, or, you know, sometimes you hear from your accountant, oh, wait until next year, or even if this transcends into, say, immigration, often specialist advisors will say, oh, wait until, you know, the government will bring out different regulations. So what's your sort of thoughts on that?
Yeah, it's a very good question. So, I mean, I don't know if I should be saying this too much. However, essentially, I'm from the UK originally with the R&D incentive over there, and anything goes over there. So when I say that, I shouldn't be saying it like that, but it's not as strict. So they haven't had as much magnifying on the incentive as what they have here in Australia for whatever reasons that may be. So every year in Australia, they are tightening around that. So in 2017, it got a lot stricter in regards to the process. And then the technical narrative became more and more important. So what you'll touch on then, Sophia, is most accountants don't know the difference between their portfolio of clients from a software company to an engineering company to a science company. Or they think you have to be creating something that's going to be absolutely world changing rather than innovative to the company themselves. So when we touch on the technical, the second criteria, that technical advancement or technical challenges, you can still claim R&D if you're doing something similar to a company out there. However, if it's not in the open domain, or you have to go back and re-engineer this yourself and face them technical challenges or face them technical uncertainties, then you can claim R&D. And I'm conscious of not sort of dribbling on too much. However, in like the veterinary sector, for example, is there might be a vet out there that's come up with a new medicine or a new way of curing whatever it may be for an animal, and you've heard about this new way of curing that. And you've gone, you know what, I want to go and replicate this or do a very similar process because it speeds up the way they do that or makes them a lot healthier and makes them function easier. But because they haven't given you the blueprint, all the R&D is how you're going about that. And this is what the ATO and Oz industry want you to highlight.
Yeah, I think that's brilliant. I think it's timely because there's a whole bunch of our clients, John and my clients, who are sitting there a little bit frustrated with but understandable of the challenges that they've recently undergone, and looking at the way in which they can build out their revenue streams. And this is most definitely for those clever bunnies that are in the audience that are thinking about this as a way of offsetting the risk or underwriting the cost of essentially pursuing these other streams of revenue. Absolutely, like listen up, and these are fantastic ideas. Anywhere from, you know, an app or some software that you think that will actually benefit you and your colleagues, to, as Jason has mentioned, processes that would actually help streamline your business where it's not documented or in common domain.
Well, it's funny you say that too, Grace, because when you touch on an app, and that's where it gets a lot very, very grey, because as you say, a lot of people are building these apps, and it could be a keyboard warrior in the back of their office doing an app or coding something together. Where it does get interesting is hiring that person who does have that credibility, who does have that university degree, who actually is a competent professional in their field, and then you can justify to the ATO that they are doing this R&D, and the incentives there to create jobs and create that innovation going to obviously keep the growth going within this country.
It's a great thing that you touch on, Jason, about employment and keeping the economy going, because, you know, coming out of the whole COVID lockdown, and in the previous, I guess, episodes we've been talking about how to innovate and how to thrive instead of just survive through the whole COVID experience, and what people are doing. This is a great, I guess, incentive or a great way to sort of look at, you're already looking at your business. How can you, and a lot of people have sort of, I guess, looked at their business and looking at ways of making it more efficient. Is this something they can use? And, I guess, depending on the documentation that they've got, it might be something that they're unaware that, what they're actually doing. They're already starting that R&D process without actually realizing that they've got something there.
It's funny you say that, John, because as we touched on in the pre-talk to this show, is people in the sector and what they do, they think they're doing run-of-the-mill stuff. So a software AI developer thinks that's what they do, that's their job. Grace, with all due respect, in your field, you think that's your job, that's why you go to uni for. And as you touched on then, John, is a lot of these, whether it be, I don't know if a lot of these companies have been impacted by COVID, but with JobSeeker and a few other payments, whatever it may have been, is a lot of companies have been doing the processes or implementing them projects they haven't done because they've got a 2 to 3 month leeway while COVID's been on. So that indirectly could be R&D that they potentially could claim on. So we'll move on to the next question. So as I mentioned just before, obviously incentives for Australian or to keep the economy growing. So I'll keep comparing this back to UK and other countries where you potentially can claim offshore developers. However, here in Australia, unless you get pre-approval of this, you have to be working here in Australia. And for obvious reasons, as mentioned, keep the economy growing, keep jobs, and it incentivizes you. So as a retrospective tool is essentially a lot of companies looking back on it may have hired that Indian developer for software sakes or got that data scientist or other people within their fields. However, now because they get back up to that 43.5% mark, they keep it all here in Australia. So unless you get the pre-approval from the government, you have to have the employees here in Australia. Might move on to the next slide, guys, if that's okay, please.
While we're moving to the next slide, I mean, can they contact you in order to, or do they have to go through an R&D tax specialist in order to apply for that approval? Is it advisable in order to think about this 12 months beforehand or before you even start the project?
Yeah, so no, they don't have to go for an R&D specialist. They have to go for a tax agent normally to be able to lodge this. However, yeah, they can get that pre-approval. So as we mentioned previously, one of the reasons that might come up is if they have to do, I don't know, for argument's sakes, build a new plant overseas or something to do with humidity where you physically can't do the R&D here. So the government then look at that and go, okay, they have to do this offshore, but then if they have the company here, it might pump revenues through here, and that's where they're paying their taxes. That's where they're employing people. That's where the company grows. So yeah, typically within that software space, and again, the service or healthcare industry, there's not many sort of vets or you're going to get dental labs or whatever overseas, but here it's predominantly going to be your employees here based in Australia.
Yeah. So for listeners who are familiar with our LinkedIn page or can skip to the end of the slides and watching the slides, if you have any problems trying to find an Australian developer that is able to deliver what it is that you are interested in, and you also want them to have some sort of healthcare experience, then feel free to either drop us an email or connect with us over LinkedIn. And I'm sure that Jason's also got his own posse of Australian developers as well.
Yeah, I think everyone knows developers now at the moment. They're everywhere, aren't they?
Jason, could I please ask you? There's a lot of news articles in the AFR talking about how only technology exports can really secure Australia's future, which, I'll just relay some facts. So for every Australian export dollar, 35 cents comes from China and 56% is from raw materials. So that's obviously quite a high amount for raw materials, which can only suggest that the technology export is low. Do you think that Australia has a particularly low percentage spent on R&D? Do you feel like it's time for Australia to increase that? Because what the facts are saying is that we haven't got enough technology being exported. Or do you think that's a case of Silicon Valley being based in the US? What are your thoughts on that?
To be honest with you, if I'm completely transparent, it's sort of not my expertise in regards to comparing other countries and what we do.
Okay. Yeah.
What I do know is that Australia is very, very far away or doesn't have the competition around our country. So in London or other countries, they can go to a neighbouring country such as Poland or Ireland, whatever it may be, and you can use their tax or their incentives. So they're all competing against each other. Obviously, with software and going overseas, that's where you had the scalability component. So with the scalability component, obviously you've known with COVID and whatever that may be, is the scalability, it doesn't matter if you're sitting at home, doesn't matter if you're having a meeting tonight with a US developer or a funder within the US, Silicon Valley, as you mentioned, that scalability component, you can be sitting in your lounge room. In regards to the exports and the R&D, again, the farming industry and all of these other industries, they only know what they do know. So they've got a lot of exports because of who Australia is, the mining, the farming, the agriculture, whatever that may be. And that's our biggest export. So they're just doing what we do know, but relating back to the R&D and innovation, it would be around your software, or because of the scalability component, I do feel.
Okay, lovely. Thank you.
Jason, earlier at the start of the presentation, you mentioned, and I guess Sophia did as well, about how healthcare businesses leverage that R&D tax incentive, and there's that slide there about how if you're making a profit, you can claim up to a certain percentage, and then, or if you're making a loss, it's a higher percentage. I think it was 43.5%. Just had a question regarding that, how that works. Can you explain that? I guess in a basic way, say for example, if they spent maybe $100,000 and how that works if you made a loss versus a profit. So I think it's something important to quantify, I guess, for our listeners.
Yeah, for sure. So essentially, I'll speak in layman terms, and if you guys have any questions or your accountants do later on, I'll try and answer that, or my consultants will be able to. So you get a refundable tax credit of 43.5%. And the misconception often is, if I'm in a loss, I'm not getting a tax credit. However, it's actually a result back into a benefit of cash back into the company. So if you have 100,000, you can actually get 43,500. So if your losses exceed that 43,500, you get an above the line revenue stream, so you can surrender that for cash. If you're in a profit, then you get that above the line revenue stream of 43,500. However, you actually artificially increase your taxable income by your qualifying R&D, which means you have that 43,000 or 43.5% minus the corporation tax rate of 27.5%, which gives you a net benefit of 16%. So in layman terms, again, 43.5% in a loss. In a profit, you'll receive a 16% or 16,000 off that 100,000 example.
Do you have a worked out example that people may be able to download from your website, or perhaps we could co-author a LinkedIn article that people can look out for that kind of gives them a visual representation of this, Jason?
For sure. So we have examples of if you're essentially in a little loss, in a large loss, or in a profit. Because in a little loss, you'll also get that full 43, but then go over, so it takes you into a profit. So yeah, we can do that for you.
Based on your expertise, Jason, as well, I guess within the medical and healthcare space, and we have a lot of health practitioners that are also business owners. Some examples within the various ones you mentioned, vets, and you mentioned also dental. There's aesthetics and that type of stuff. How does that work? That's not exactly just software driven, I guess.
Yeah, for sure. So again, a few key areas in dental labs, for example, would be like orthodontics, endodontics, different surgery or pathology. In regards to aesthetics, is just a new way of going about that. So whether it's raw materials, whether it's a new way of speeding up the processes so you can have more clients, whether it's essentially longevity or being able to aesthetically please somebody for how they want to look. Obviously, that's going to be more in a dental lab in comparison to a vet. And as you said, touching on farms, increasing the yield of the farming population. There's all different areas of R&D that people don't actually know about.
I guess another one as an example, I'm just not sure whether or not this will fit. I've got a client who they're an orthopedic surgeon, and they do hips and replacing hips and that type of stuff. They're working out a way of, because it needs to be at a certain angle based on how someone walks, and making sure that hip replacement is on the right angle, like a 1 or 2 degree sort of difference can make a big difference in someone's life. I guess in that sense, what can you claim with regards to the R&D tax incentives spending wise, because he's got a research assistant that is, gathering all the data from all his, from all the surgeries that he's done. Anything else that he can claim on that is the time spent on, gathering all that information with other external sources, that type of stuff. Is that something that he'll be able to claim, for example?
Good question, John. So the idea of the incentive is you have to be able to have the idea of commercializing what you're doing. So gathering that data for a report or whatever it may be, you potentially can't claim upon that. However, if you're gathering this data to essentially then exemplify to a client, or you're selling out to a hospital that we can do this, this, and this based upon what the research you've done, therefore we can decrease the risk of going back into a hip replacement in a decade or 2 decades, whatever that is, that time can be classed as R&D. It's sort of an interesting area. And again, it's above my expertise. So I'm going to try and sort of explain it as well as I can. Is there could be 2 components here. And the first is the software component. So the 3D imaging of how you position a client that's 60 years old to 80 years old in the angles that you mentioned, or the way essentially they're structured, how they go about it. And then you also have the physical component of the hip replacement. So the material that's being used, how well the infection rate is decreased because you're using new material, how long the actual recovery rate is. So all these different components are all R&D. And to touch upon your point, John, is there's 5 main criteria. First one is your technical salaries and subcontractors. So your research assistant or your scientist or a surgeon, whoever that may be. Your indirect salaries. So this would be essentially time contributed by, as you mentioned, your friend or who had actually put this project together, who isn't directly related, but they had that component of R&D. Consumables. So if you're testing these hips or whatever it may be on a certain outcome, then that's also the wastage of these items for the process is R&D, and then utilities and software licenses as well. So we take everything in and then work out where the R&D does lie based upon what the client mentions.
Great, thank you.
I'll go to the next slide, guys, that's okay.
Wonderful. Well, we're actually nearing the end of the slide deck itself. In terms of further questions and comments, John and Grace, do you have any further questions that we can ask Jason?
Yeah, if they apply for an R&D tax, or they put in the application, does that impact their IP application? Does one have to come before the other? Is it seen as a public declaration?
To be honest with you, I'm not entirely sure on that. I assume not, because I think the IP is essentially included in the R&D. But again, I'd have to ask my technical experts who can actually answer that question for you. I'd rather, not make the assumption.
Sounds great, guys. We'll post an update on our LinkedIn of Jason and his team's expert answer then. Were there more slides? Did you want to work through an example, or?
I've got another question for you, Jason, actually. Yep. With these R&D incentives, and everyone's in that tax planning stage at the moment, it might be a bit too late for most to come up with ways to reduce their tax for the 20 financial year. Has there been an extension with regards to COVID and what they can do to maybe sneak it into this year's tax year, any of the R&D?
Well, thank you very much for reminding me, John. I should have mentioned that earlier. So in regards to the 2019 financial year, it's actually been extended from the 30th of April till the 30th of September. So previously, you would have to submit your R&D claim, whether in a loss or a profit. So in a loss, you get a refund. And obviously, cash is king for most companies in a loss. So most of them are submitting around that July to December time, whatever that may be. As a result, because of COVID, they've extended that deadline. So if people are in a profit position and have actually paid the corporation tax, they'll get a refund of any corporation tax that they paid over that we can find some R&D for. So as an example, if you've got a surgeon that you mentioned there before, a hip surgeon that's developed a new product, a new prototype, or a new process, there's actually in a profit position and they're doing R&D with a team of X amount of consultants, they've just paid a corporation bill of whatever that may be, they can actually get a refund rather than that tax offset, because that corporation tax is being paid.
And they've got till the end of September to do the adjustment on that.
Correct. 30th of September, that's correct.
Perfect.
Excellent. Okay. Is there contact details or ways that people can contact you?
Yeah, I think I sent through to Sophia contact details, and there they are there. So yeah, if people want to get in touch, obviously happy to answer any questions. Again, I'll sit here and with my ignorance and just say if I don't know the answers, I'll pass you on to experts that do. As I said, I can sort of touch the surface, but I'm no doctor, even though I think I am sometimes. But no, I'm no doctor. So yeah, happy to help out regardless.
I'd like to ask a question about using R&D in order to enter into the UK market, or conversely, UK companies who might be listening to this because of Birkwood's future plans, how they would actually use R&D in Australia in order to really penetrate into the Australian market. What are your thoughts there?
Yeah, so the Australian market's a little bit different, where essentially you can actually have a subsidiary here and be doing the R&D here and be able to claim upon that. Whereas other countries like the UK, I'll keep relating this back to the UK, it's wherever the money's recharged back for the parent company. So if you had a subsidiaries in the UK and wherever it may be, but the parent was in the UK, you can actually claim the R&D if it's recharged. Whereas Australia, the entity just has to be here. So for example, a lot of pharma companies might have a Chinese parent, but a subsidiary here. As long as there's staff being paid here, you can claim the R&D. So yeah, that's essentially a good upside here with Australia.
Excellent. So, of course, you know, those people who are listening from our Gorilla audience, if you're thinking about using the R&D tax incentives, this, of course, should be couched into an overall strategy of market entry, and we would strongly encourage you in order to engage a discussion with Birkwood as part of that strategy that we would put together for you as well. Jason, what's the most interesting R&D tax claim that you've had? Anything weird or wacky?
Yeah, there's a lot, and some of them aren't even PG, to be honest with you. So, like for example, food manufacturing, where it's the decrease of the size of air bubbles within a pizza, or you're trying to do 8 years to do a microwave fish finger, all the way down to, yeah, again, I don't know, you put me on the spot there, to be fair.
Sorry about that.
Yeah, anything out there that you essentially can think of, like within every sector, has a bit of R&D. So that's what the core component is.
Yeah.
To what level and to what extent depends on who's developing that or whatever they're replicating.
Yeah.
But there's some cool things out there for sure.
There are out there. I mean, like we assist in. I have previously assisted in R&D applications as part of the market entry strategy, and some of them are just absolutely fascinating. You know, like you have the orthopods who do, you know, artificial intelligence to measure angles and things like that. But then you have some stuff that you're just like, you're absolutely convinced is going to change the world. There's great,
and that's another key component, Grace, is there's so many intelligent people out there that we find that they're not really that commercial because they're so intelligent and they're literally just, that's what they do, that's all they know. And we come across so many ideas where they may get funding or whatever that may be, but there's other companies out there that just get the funding or they're commercially savvy, can speak to anybody. And some of these actually really good ideas or these technical experts often go missed. So yeah, that's why I strongly believe so many startups fail, because they're so good, they know what they do, but it's just a commercial entry or strategy that they can't implement.
That's exactly what we're here for, and that's why we're building the network. So there's the strategy, the operations, the financing, and of course, very much so your advice and in order how to get government support and also attention. You know, like I think that a lot of VCs, especially in the UK, when they saw that an iUK grant had actually been issued, it just elevated you amongst all the other applicants, all the other startups or scale-ups that they were talking to. I think it's incredibly important in order to also use the R&D tax program. And I think that that's perhaps the key distinction that I see between the UK and the Australian R&D system, is that very much so large-scale organisations can use it to underwrite the risk or to offset the risk of actually engaging with startups. So it would be really great in order to see if that starts coming up across your desk. as methods in which people can actually work together. So.
For sure. Yeah, well, there's a few other grants out there and investments or tax breaks for investors as well here in the UK. So that's probably a slide for another time. But touching upon what you said, there is them tax breaks or the investor ones to manage your risk, or as well as moving forward to, if you do have stakeholders that you need to speak to, you can budget that financial R&D into your financials as well. So you can say, okay, I'm getting investors. All right, your $1 million that you're investing, it should turn out to be X amount of R&D. Obviously, you're going to lowball that, have everything in place. Therefore, you're going to be getting 43.5% on the dollar for everything you invest in, so to speak. So it's good as a budgeting tool as well.
Fantastic. Look, we'd really like to talk to you more. Sounds like you've got a couple of topics that you could cover, but the next one coming up that we'd really like to see or hear your opinion on is the post JobKeeper, post September world. What your predictions are with regards to the rest of calendar year 2020 and going into FY 2021 as well.
Yeah.
So happy to come back?
Yeah, for sure. I'd love to. Again, I'm no expert in that area. Most of it would probably be my either valuable or non-valuable opinion. But yeah, would love to come back and have a chat about that too.
Very humble, and I think everyone here has appreciated your commercial input. So thank you.
No, thank you very much for your time, guys.
John, Sophia, do you have any other questions?
No, not necessarily a question, but more, I guess, a reflection of all of that. The first, I guess, the first four episodes that we've done is, a big chunk of it is focusing on cash flow. This is one of those things that sometimes people miss. You're already doing the stuff to make your businesses more efficient, and monetize that or get a little bit more cash back into your pocket with all the things that you're already doing. And yeah, thank you, Jason, for highlighting these, the ways to be able to use that R&D tax incentive for essentially what people are doing anyway to make their businesses more efficient.
Yeah, no, thank you very much, John. And to be honest with you, I shouldn't be saying thank you because it's money people are entitled to, where it's almost a gateway or a solution of helping that out. So as you say, people are sitting there doing that. They don't realise because they're doing actually innovative stuff. It's run-of-the-mill stuff. So it's money they are entitled to. So it's easy. It's a pretty thankful job in what we do because it's getting people access. And it's worth noting, I don't want to sort of plug ourselves even more in here, but it's a success fee model. So you essentially get the money and then success off that is the fee. So it's a very cash positive position.
Excellent. Thank you very much, Jason. It's been great to have you on the webcast. And just to inform any of the audience, we do have a number of other episodes upcoming, including governance, which is obviously what happens after JobKeeper, advice for medical startups, and PPE conservation, whether this is ethical or not. So our next webcast on governance is likely to be on the 20th of June. And yeah, we welcome you all to view that one. And thank you very much for joining us today.
Thank you very much, guys. Much appreciated.
Thank you all.
Thank you, guys. Bye.
Thank you.